Good evening, everybody. Happy Monday. Good to be with you. Let's go. We got a lot to cover tonight, guys. I just want to say hi. Happy Monday. It's April 21st. Man, we're already rocking through 2025. What have you been doing? All right. Hopefully, you've been doing some great things, guys. And if you're here in this call, most likely you are. I love what I do, guys. We're doing great things. I love what I do. I love who I get to be with. I love being with you, people like you, every single day. I live the dream, man. I'm living the dream. I hope you're living the dream, but I get to live the dream in life because I get to do exactly what I want to do and contribute the way that I get to contribute with people, solve issues in life. I mean, this is how I'm built. I love solving issues in life. I love making sure that you guys have solutions. I like making sure that the job gets done. I like forward progress, and I just keep living that life. I like spending time with my boo. I like spending time with my wife, and we get to do this all day together. She's an entrepreneur too. She's home with me most days. We get to go on a walk every single day. So what you're hearing, guys, is me expressing gratitude for you, gratitude for my wife, most definitely for my wife, who has my back in every single way. I'm grateful for our team that we have here, the staff that we have here at By the Books Consulting. And definitely grateful for, the opportunity that today brings. And welcome to tonight's call, guys. Once again, excited about this conversation. Last week we talked about C-Corps. We got into a conversation about that. And I want to start talking about some other structures and understanding how to leverage those for yourself in business so that we can eliminate confusion and in its place put in peace and ease and clarity. Okay, so let's get started, guys. FYI. Boom, this is me, Cheston Bulgin, with By the Books Consulting. All right, so I'm the founder of this company, CFO and tax strategist, your accounting superhero. And you can reach us at 888-4BTB now. That's 888-428-2669. You can reach us on the web at youraccountingsuperhero.com. You can also reach me directly at cbulgin at youraccountingsuperhero.com. And of course, you can follow us on IG at Your Accounting Superhero, on YouTube as well, at Your Accounting Superhero. Just find us there. Most likely, if you're here in the call, you're chiming in from one of those platforms, either YouTube or from Instagram. Welcome again tonight. So how do we help you? We help you in these areas, man, when it comes to creating real peace of mind around like how to leverage and wield the tool of business inside of what you're up to, because you're using this as a tool to create life for yourselves in this area. And the life that you get to create in this area gets to be a life where you get to have more profits, more cash in the bank, some legacy, asset protection, wealth. We help you with that. And also around the systems that you get to use, like technology-wise, what are the technologies that you're using and how to use them fully to make sure they're delivering exactly what you want them to deliver. And also inside of tax strategy, tax planning. I was on calls today, and I'm really clear that it's a missing for people, man. The thing that's missing for people is execution. All right. So we have an idea of what we want, but then we don't take those right actions. We mis-execute on those things. We don't execute the way that we want to execute. And because of that, there are consequences, which is why it's really good to have conversations with somebody like me, okay, on a regular basis to go over what the options are for you to take action on certain things that you're thinking about in business, because there are consequences to not executing in the way that you want to execute. Like, for example, I was on this call today, and people I was on a call with today, they have tax consequences because of not really understanding how to execute throughout the year on certain things. And when it comes to, S-Corp structures, which is what we get to talk about tonight, S-Corp structures. And because of that, there's tax consequences and, and unexpected extra payments that we didn't want to have. Man, imagine that, like having a loss, but still having to pay taxes on losses. Okay, that sucks, man. And you don't have to do that. You can actually execute day in and day out to execute well and have structures in place where it's easy for you to have the results that you want in this area all the time. Okay, And before we get started, guys, I just want to go over this quick disclaimer. The following is for educational purposes only and is not to be considered financial accounting or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. And if you're here today with me in the chat, give a shout out, man. Where are you from? You know, what are you going through? What kind of business do you have? If you have any questions, put it in there. I want to hear from you. All right. This is here to serve you above all. That's why I'm doing this, to make sure that you get served while we're here. And if I can do it live, fantastic. Let's go. All right. So today we're going to get a conversation about S-Corps. And I really want to deliver a basic understanding with how it impacts you, like tax-wise, it impacts you cash flow-wise, and some of the things to look out for when we're looking to have asset protection. We're looking to have the tax benefits. We're looking to maintain cash flow and be profitable in this type of business. I really wanted to be with you here so that you have a real clear understanding of how to do this every single day, and why do you have this structure, and how you're going to leverage it to the maximum. So still stay with me, stay tuned in this conversation, and you'll have that on the other side. Okay, so I want to go into this and talk about a few things. And here's one of the things I want to talk about. Can't really understand S-Corps without understanding flow-through entities. All right, and first of all, what are flow-through entities? Why do you care? And how does it benefit you? All right. So let's just go over the definition real quick, and then we're going to talk about this together. All right. These entities are not taxed, but are required to file a tax return to reconcile the income of the owners or shareholders. In other words, the income generated by these entities are taxed at the individual level. The income is passed through to the owners. Okay. So let's talk about it. So most like entrepreneurs like you who are in this conversation, we start businesses. Good evening. Good to see you. All right. So most business owners like you, entrepreneurs like you, we get into business because we want to increase our lifestyle through business, like enhance it in some way. So you want to do better. That's why, and you like better in the sense of, okay, well, I go out here, I want to have freedom because I don't like working for people. Because if you're an entrepreneur, most likely that's one of the things that you're built with, is you don't want to necessarily work for somebody else. You're built to have that type of freedom. And also on the other side of that, there's a lifestyle that you get access to that you wouldn't have access to otherwise, like control over taxes and cash flow. You know, like how to have control over cash flow in a lot of cases, especially when you're doing well and you're profitable. So there are some clear benefits to being on this side of the equation as an entrepreneur. And how do you benefit from this fully? Well, understanding what pass-through entities are would help you benefit fully. Why? Because you understand like what you're responsible for when it comes to taxes. So I'll hear people say this. I'll hear them say, well, what do I owe for my business taxes? When they have a partnership, okay, or an S-Corp. And when I hear that, you know, there's an indication that there might be a slight misunderstanding of what the structure is. And because there's that misunderstanding, they could possibly be taking actions throughout the year that don't really benefit them tax-wise, okay, because they're misunderstanding the structure. And if we have the understanding, there is an alignment that comes into place. And when I say that, it means that all of my energy, all of my actions, everything that I'm doing is driving forward a specific outcome for me in terms of results, okay? And if we're not in alignment, then there's a possibility that we're not really getting the full benefit and we're not getting the maximum results for our efforts and energy that we're putting in. So if you have a flow-through entity like an S-Corp, which means that corporation is not taxed in and of itself for the most part, okay? And we're talking about with federal income taxes anyway, and for a lot of states as well, because some states do tax S corps at the state level. So I'm not talking about that. I'm talking about federal taxes, all right, and treatment of this corporation, this S corporation. Okay, it's flow through, so that means that the taxes are handled on the individual level. And what does that look like? It looks like, well, there's activity that happened with the business that wants to be reported on a separate return. We're going to talk about that a little bit later. And then when that return is filed, it says, okay, well, this is what happened in terms of profitability. Well, how much of this belongs to each of those shareholders? That's really the whole point of the thing. That's the whole end in mind is, well, how much is associated with each one of those shareholders, with each one of those owners of the company? How much should we expect to be looking to tax those individuals on based on the activity of this company? All right. So that's what we're really looking for there. And, the S Corp in and of itself serves to deliver that information so that, the IRS can know exactly what to tax the owners at the individual level. Now we get a form K1, that K1 goes over to the owners, and then the owners handle that on the individual level. All right. So that's what it looks like to be passed through. No taxes there at the S Corp level. We want to handle that on the individual level. All right. Now, let's talk about something inside of that. So if we're going to run our business cash flow wise, we understand that, okay, well, I'm taxed on like the profitability of the S Corp is what I'm taxed on at the individual level. So if I'm one owner at 100%, so 100% of that income belongs to me as one owner. If they're two and it's 50-50, well, half of the income belongs to one owner, half of the income belongs to the other one. If it's split four ways, you got four shareholders in that company, four owners in that company, and it's 25% for each. Well, 25% of the profits are taxed to one of the shareholders, and the other shareholders the same, and other shareholders the same, and other shareholders the same. Okay, so we understand that that's going to be the case. That's what we're looking for tax-wise. But overall, we want to know that that's the profitability that we're being taxed on, like the profits. So at the end of the day, after all the income comes in, all the expenses go out, the net earnings, the net profit is what we're looking for the owners to be taxed on. Okay. So that's distinct is what we want to get. So your business could actually profit $100,000. And if you're a single shareholder on that S Corp, you're taxed on those profits of $100,000 on the individual side based on the K1. So you can add another $100,000 of passive income, all right, to your individual tax return. That would be the impact, and that would handle for like impact for taxes anyway. Okay. Now there are some other things inside of that we want to consider, like, well, how are you extracting money from that company, which is a separate thing altogether. All right, it's one thing to have profits in the business, but extracting those profits and taking that money out is a whole nother story. Okay. So let's talk about some definitions for that before we get too far in the conversation. All right. So flow through pretty much sums it up what I was saying. And again, guys, if you have any questions about that, if I'm leaving you in the dark along the way, if I'm moving too fast, if something's confusing, if it's like, what are you saying, Justin? Let me know. Put it in the chat, right? Especially if you have any questions. As a matter of fact, if you're following me, if you're following along and everything is like, yes, I understand this, put a 1 in the chat. If there is something that you're missing inside of it, put a number 2 in the chat. All right. And we'll get that squared away along the way. All right. So let's look at this. Okay. What is an S-Corp exactly? Now that we understand flow through entities and pass through entities, same thing, flow through, pass through, synonymous. Well, what is an S-Corp? Okay. So an S-Corp is a corporation that elects to pass corporate income, losses, deductions, and credits through to its shareholders. Yeah, it is a pass-through entity. All right, it's great. We're talking about the benefits of it, all right, in a second, what it's really great for. But the shareholders, get this, okay, they won, all right, that was not here. He wants to be a U.S. resident, U.S. citizen. Grade 8. Thank you, my man. All right, got you. You're following. That's fantastic. All right. So, this Shareholders must be a U.S. resident, like a citizen or a resident alien, rather. That's not here on this. It also cannot be, so in essence, it cannot be a non-resident alien, okay? It needs to be a U.S. resident, U.S. citizen, U.S. citizen or U.S. resident alien, okay? And it also wants to be not an LLC or a partnership or other corporation. So who can be a shareholder in an S-Corp? Basically, an individual. That is a U.S. citizen or a U.S. resident alien. It can also be a trust, can own an S-Corp. Okay, those are the things that really are available for ownership of an S-Corp. So a trust is like a disregarded type entity format and a disregarded owner inside of that S-Corp. So that what it means is that basically the income for the trust flows through to the beneficiaries of that trust. Okay, so that's what that means. All right, so typically it wants to be somebody like you as an individual that's the owner of an S-Corp or a trust that is the owner of an S-Corp. Now, it can't be more than 100 shareholders either, right? Anything above that, it is not compliant. It's like it doesn't qualify as an S-Corp structure anymore. And you will feel all the pain. Okay. All right. To make sure, just to be straight. All right. And it wants to be a simple stock structure. It can't be a complex stock structure inside of an S-Corp. All right. These are things that we want to look at when we form the company. So if you're operating anywhere outside of this, or you're doing the don'ts inside of this, be mindful you're going to be in compliance risk, and your S-Corp is at risk. All right. So that's what an S-Corp is. And let's talk about some benefits real quick while we're here. Cool benefit, no corporate tax. As opposed to last week, we talked about C-Corps, where there's a corporate tax for that. So we're not dealing with double taxation. It's a pass-through entity, which we talked about a little while ago. It's only taxed. Tax is only handled at the individual level with the shareholders of that S-Corp, okay, which is pretty cool that you don't have double taxation because it's not taxed at the corporate level. Okay. And the main benefit of being an S-Corp is that we reduce self-employment taxes. So self-employment taxes is an additional 15.3% that is due on earned income. And if you don't have a structure in place to reduce it like an S-Corp, you will be exposed to that. For example, sole proprietorships, they're exposed 100% to self-employment taxes without limitation. And partnerships are 100% exposed to self-employment tax without limitation. All right, in most cases, or that's like a foundational level with that. Okay, and S-Corps are structured so that we don't have to deal with self-employment tax from that structure. And there's a nuance to it because we get to have a reasonable compensation through wages, right? And that's another like caveat to it, that we get taxed with self-employment tax through the wage portion of what we give ourselves in an S-Corp. So that gets limited inside of the structure of an S-Corp. So that's a major benefit of this structure, is to reduce exposure to self-employment tax. All right, asset protection is another benefit. This is why we get in the business, so that we restrict all of the exposure to what's in that business, and anything outside of that business activity that you own or that you are dealing with personally, as long as you're abiding by the laws in operating of that S-Corp, you're shielded personally from the dealings of the business. So that's asset protection, which is fantastic. And then tax strategies, like through health insurance and retirement, awesome availability there to be able to use some of that. And then, of course, like really, really great is capitalization through shareholder equity and, business loans and business credit and everything else that you can build through S-Corps. Awesome. All right, benefits to this S-Corp structure. And then some of the pitfalls real quick. Yeah, we want to have reasonable wages to the shareholder or officer, really officer compensation, shareholders and officers. And what that looks like is that, yeah, there wants to be payroll set up in an S-Corp, and you want to be on the payroll of your S-Corp in order to satisfy the compliance aspect of reasonable compensation. Okay. And that is what is subjected to, like, what we call the self-employment tax, which is FICA tax, which is, that you see it, Social Security, Medicare, inside of your paycheck. You're paying one side of that from the employee side, and you're paying another side of that from the employer side. So that's what the self-employment tax is. All right. So that's one of the pitfalls. The filing any additional return. So it's 11 and 20 as an 1120S return that wants to be filed with an S corp, and then typically you wouldn't have to have an additional return if you didn't establish this S corp tax treatment of your company. All right. You, like, if you are sole proprietor or just operating that business by yourself as a single member LLC, well, you wouldn't need an extra return if you're the only person in there. You would just file one tax return for your individual and business, which is less of an administrative cost. So there's a pitfall there instead of adding that additional cost to file the return for an S corp. And then, of course, we're dealing with late filing penalties that would not necessarily be there if you did not have an S corp. So, if people aren't prepared to file and have their books in order to file, and they haven't filed for an extension, that penalty is $200 per month per shareholder. So you want to be on time. All right. So those are some of the pitfalls and limitations that you can look at with an S corp, as well as making sure that you have all the things in place, like your corporate books, your meeting minutes, and everything like that, to ensure that you're getting the full asset protection from the structure. Okay. All right. That was a lot in a short period of time. All right. In terms of the the pros and cons of an S corp. Okay. And let's bring it back. Well, how's it going to relate to you? People are told a lot of things online. Like, I'm online right now. I'm telling you some things right now about S corps, but there's so much information out here about what to do and how to implement this. Well, how do you know for yourself what to take on and how to use this to your benefit? Well, number one, if you know that your business is going to be profitable, you like really you're going over the $35,000, $40,000 in net profits for your business and beyond. So if you're in this conversation, then most likely that's going to be you. Okay. Because my people, they're actually doing really well with their businesses, especially if you're in the trucking and construction industry. You're being profitable. Okay. So you want to make sure you're limiting that extra exposure to taxes and understanding how to leverage that. So, like, understanding how to balance wages and everything else to make sure you're not giving yourself too much in wages, but not too little in wages, to make sure that you're compliant and then still have the full benefits of not being overly exposed to the additional taxes associated with self-employment. Okay. And knowing that and being able to navigate that with S corp structure is super important. All right. This is what you want to master inside of the structure. Like, if you have it, you want to execute on it fully so that you get the full benefits of it. Okay. And then all of the tax strategy that goes along with it. Like, what can we set up for retirement planning? How does my health insurance work with this so that I can get the full benefit? Should I have some type of HSA set up through my S corp for me? What does that look like? How do I pay my kids with this structure? Can I do it? All those things are there for us to address inside of the structure. And you can maximize your entire life through this S corp feature. All right, this is what it's here for, and it's only going to be as good as your execution on having the structure, is what I want to say. Okay, so I was, like I said, I was in a conversation with somebody earlier today, and something like as simple as, well, I say it's simple, right? It's not so simple for everybody else. Okay. Basis and understanding what that is in your S corp and the impacts of it tax wise. Like if you think you're going to take losses, but all of a sudden you don't have enough basis in your company to take losses. It's like, what? Well, why am I not benefiting from the losses that I had this year? Well, you didn't have enough basis in your company. Well, what is basis? How much? What do I need to understand about that, and how do I manage it on a day-to-day basis? A lot of it deals with your bookkeeping. If you have impeccable bookkeeping, then that basis aspect will be taken care of throughout the process of you operating inside of bookkeeping every single week and every single month and every single quarter and every single year. Okay. And you don't have to really run into trouble when it comes to that, wondering, well, why am I able to take the losses that I had this year for my business, or even understanding from a cash flow standpoint how to pay for your own lifestyle through your business. I said earlier that profits are one thing, but taking money out of the business is another thing. Okay. So you're not taxed on what we call distributions necessarily when you take money out of the business for your own personal needs for the S-Corp. Necessarily not really taxed on those. Like when you extract money from it, you're just taxed on the profits. But you would want to have enough in the business to take from it in a distribution without having tax consequences, right? And so those are things that really count in terms of execution. And then what to file and how does that look? What kind of things can you take as deductions on it? You're not going to pay your kids and expect to not pay FICA taxes through an S-Corp if you're going to pay your kids. Well, what do we do in that situation? How are you going to make sure that your kids can get paid? I'm talking about if you have kids that are under 18, okay? Or you're looking to benefit from paying your children without having to pay taxes on what you pay your children, Well, are you going to use an S-Corp for it? Well, it doesn't make sense to use it directly, but what kind of structures do you have in place to make sure you're able to take those deductions legally, compliantly, and have everything that you want to accomplish out of that? How do you pay your grandkids? So I had somebody that I was talking to not too long ago. It was like toward the end of the year. And they said, I have a grandkid. He comes in here. He works for our company. We got him doing all kinds of things. And I just can't pay him, directly. It doesn't work like that. And I was like, what? What do you mean? Right? There are ways to do that. And just understanding how to do it in a way that serves you is another level, right? So that you can accomplish everything you want to accomplish in terms of legacy. And man, there's so many benefits out of that, being able to teach your grandkid about business and leave that legacy with your grandkids and being able to have the full tax benefits and showing that in between generational level of how to handle that tax wise and being somebody who can leave that legacy all the way around for your family. Pretty cool stuff. Okay. So there are some things that we want to understand about these benefits and how to use them with the S-Corp, and understanding some of the cons that are there too, and to make sure that number one, when to get into the S-Corp and when it's going to really benefit you, and two, how to stay compliant with it, and three, how to stay out of tax trouble with it as well. All right, so those are the things that we want to take a look at. Get the clarity around this, guys, is what I want to say, so that when you're operating within this structure, you actually get the full benefit and outcomes from what it is that you're looking to accomplish with that structure. That's my cry for you. Okay. And if you're ever confused about it, you definitely hop on a call. And I have a thing here, guys, too, at the end of this call. If you stay at least until this point, toward the end of this call, you will get access to a free tax consultation, especially if you're dealing with when to consider using an S-Corp. If you have an S-Corp and you feel like you're not getting the most out of it, we can pinpoint why you're not getting the most out of it, and pinpoint what to do next in terms of making sure you're getting the most out of it too. All right. So if you're here in this conversation, this is my promise to you, is that you get access to a free tax consultation inside of it. Let me just put that in the chat so I make good on my promise really quickly, guys. Boom. That's for you. There we go. All right. So, you guys on YouTube, you have that. And if you're in Instagram, just let me know if you did not receive that access to it tonight. All right. And to complete on this, guys, how to really use this to your benefit. All right. How to really use an S-Corp to your benefit. This is a great combination of asset protection and tax reduction. This is the perfect beast for that for you if you're a Main Street business owner. All right. And you're single owner or you just have you have less than 5 owners. It might be like you and your wife maybe may own a business and working it together. You and your partner may own a business and working it together, and you're looking to get the most benefit out of it. It's a great combination of asset protection and tax reduction. Tax reduction in the effect of making sure that you convert a lot of what would be earned income, which is subjected to self-employment tax, into passive income, which is not. Okay, super great combination for that. And you want to make sure you maintain compliance with it. Pay yourself a wage that's reasonable. Understand what that looks like for you, and then take distribution to make the difference up. Only if you have enough in it to take distributions to make up the difference. And then know your profitability. Make sure you keep your books tight. Is what I want to say. Now, if you have any issues with keeping your books tight, I mean, we help people with that. We'll get you squared away. Okay. And that's what I want to leave you with in terms of how to really use it to your benefit, and cash flow and profits and everything that goes in with that. It's really built on the foundation of these things that I'm talking about here. Okay. So if you have a foundation where you're keeping your books tight and you're actually monitoring where your money is coming in from and where it's going out to, by its nature, it will improve your cash flow position because you'll be present to it. We say, what I can measure, I can manage, and what I can manage, I can master. So just by the nature of that, what that means is like I'm looking at something all the time. Like if I go out and like look on the scale, I dropped 30 pounds in the last 60 days, guys, because I stepped on the scale. I was like, what? Now I'm measuring this, so I get to master it. And just by the nature of that, it's a pull for me to take actions around it because I'm completely present to it, and I can take actions around it, and I can create a game plan around it. So just by the nature of measuring things, like we're really inside of this area, it's really the bookkeeping is what measures that with absolute clarity. All right, so make sure that we're responsible that way to measure it. So that will improve cash flow. That gives you access to improving cash flow. And the other thing is making sure we're taking care of compliance things around this entity, this structure. Okay, and that's what I want to say about that. Guys, it's been great being with you tonight. I'm hoping that you got some tremendous value out of this. Now, if you have any questions for me, of course, you can leave them in the chat for our conversation. If you're watching it live, if you're watching it on recording, definitely leave a comment below or a question below so that we can serve you over here. All right. My name is Cheston Bulgin, CFO, tax strategist, your accounting superhero. It's been great being with you tonight. I'll see you next week, next Monday. We'll continue the conversation then. All right, guys. Take care and bye-bye.